Good morning, everybody. Green on the screen around the world. Hong Kong is down 2%, but the Russell Small Caps is up nearly 1%. Tech is about 0.5%, and everything below. So S&P less than half. Japan not up enough to kind of trigger our mark, 0.5%. But it's working its way in that direction. And the Dow's not even a quarter. GDP first revision today at 8:30, advanced goods also. And then we've got more Fed speakers. There was a bank CEO, I can't remember which one, I don't want to name the wrong one, that now suggests the Fed can cut even sooner, kind of hyping up the idea that pulling forward those rate cuts, it's like they're just racing to see who can name a Fed day cut sooner than the other person. The market's going to be sorely disappointed when Powell comes out and says the same thing that he's been saying. His message doesn't change. They're not going to cut anytime soon, right? That's his message. High for longer. No longer is he really saying higher, like they're going to raise rates even more, but holding high for longer has been the mantra for a while now. So we want to keep our eye on January, see if they really start pricing in more of a rate cut here. They've priced in 2% or almost. Well, they knocked it down a little bit, but I would be watching for this to get priced in, right? That's kind of the idea. They're going to begin to unwind this big bar at 96.5, and we'll look for them to start pushing up this other one. Yeah, they're still hitting March pretty good. We went from 34 to 39.8. So that's what I would watch for. If the market continues to price in this rate cut for January, then we're likely to see the markets be able to hold these levels and or rise. This isn't necessarily enough to make a market rise, right? But it takes weight off of the market. It's the old phrase, markets just go up. That's just what they do. And the only time a market doesn't go up is when there's something negative holding it back. You take weight off of the market, just like a balloon in water, it's going to buoy to the surface. We're getting a lot of data out of Japan tonight. So, think about what you're holding and, know what you own, I guess is the phrase. One thing that I've been doing lately is I've been buying out of the money SPY and SPX options. Tomorrow's expiration today. And I'm going to continue to do that until we finally get a move, because we're compressed now. And the idea is that we're going to likely expand drastically when the move comes. The longer we stay compressed, the bigger the move is likely to be. And I've been targeting options that are about 2 or 3 pennies on SPY. If you look at the strikes, it puts me at about 1 to 1.5% out of the money, or away from the at the money price. I do the call side and I do the put side. So that comes up to 6 pennies a day in cost. If it doesn't work, then it's just lost. There's no salvaging those. And it doesn't cost a PDT because I get them today for tomorrow's expiration. I've been doing that, I don't know, 3 days now. Not really enough move to see real monetization out of those. but I've had more than one that just scratched with break even or even 1 or 2 pennies of profit. Options are cheap right now. Volatility is so low that it's just it's like a lottery ticket, right? Low chances of winning, high payout when it does win. And until we get the big move, it's a really cheap way to play a consistent theme every day. Yesterday, Waller popped the market pretty good. There was a couple of Fed speakers yesterday that really lit the market up, making comments about they don't see any reason to hold rates at this level if we continue to see data coming in that suggests they've hit their target, which is a different message than what Powell has been saying. So we'll see if that gets corrected. But right now, it's just risk on. Santa Claus rally, performance chasing, CTA, everything is just pile in, take it long, run it till it breaks. There's the spot gamma levels for the day. I did post SPY, ES, and SPX earlier, but if you want to capture those screenshots. We have an inside week breakout. 45.80 is last week's high. We're out of it. We're on the move to the upside. This is a continuation from 4,100. And so far, it's not looking to stop. That's going to get us into the proximal line easily by the end of the week, unless something changes. And we do have some big data coming out this week that could certainly turn this market around. But it has the capacity to turn us around. It doesn't mean it's gonna. So we'll just kind of go through, there's a lot of levels here. So we'll just work through it one at a time. There's the previous week's high, that 45.80. We're really close to the ADR half, 45.85. It's this number right here. So from where we open in the Globex, it takes half of the ADR this way and half of the ADR that way. And combined, it gives us that 0.96% move, right? There's the other side of the ADR. So half and half. But if we go one direction the whole day, we could make the entire ADR in a single direction instead of half and half. If we do that, it gets us right into the call wall. It gets us into that yellow line here, 46.07. The call wall is resistance. We expect selling at that level. And they can move the call wall, so it's not set in stone. If you've got the options tools, you might be able to spot them rolling it. Otherwise, you won't know that it's been rolled until tomorrow. For now, though, that is where the call wall is located, and you have to assume that when we get to 4,600, we're going to get into that call wall, and we're not going to get through it unless there's just an absolute blowout piece of news today that sends us shooting through that level. That would be the only thing that can get us through there. If we just work our way up through a normal day, we're not going to get above that level today. Something to think about if you're running 0-day trades this afternoon and maybe want to put on a 100-point wide SPX call credit spread, collect somewhere like $47, $48 in credit. We usually run that, for 30 to 50% profit. So you're looking at what, $2,400 for a 90-minute trade. Yeah, I like that too. That sounds pretty good. It tickles. Volume is within normal range and we don't have a market maker move. We could consider this a missed daily pivot, really. We barely tagged it at the open. It's kind of hit and miss if you really want to consider it. There's some purist out there I know that's going to say, no, we hit it. It's done. It's not a missed daily pivot, but I'm not so extreme as that. So we could consider it an MDP, but either way, it wouldn't really count until tomorrow anyways. But if we do count that as an MDP, then it's the first one we've had since we started this topping pattern. Right? It's been well over a week of just digesting that last really big move. And as you can see from the breakout today, we're done digesting it. We're on the move. This is now pointing to higher for longer, to take a little bit of language from Powell. Ten-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. The point of control is with us on TPO and on the volume profile. There's a very large shallow area below 45.20. There's a less shallow area, but still significant at 45.50. So if we break yesterday's low, for an example, we could move from 45.50 to 45.20 relatively quick. But getting through 45.20 is likely to be difficult. So unless news today propels us to the downside, slicing through these levels, I don't see how we would sustain a move through that 45.11 cog line and into this really shallow area. Speaking of this shallow area, we're going to lose this today. As the day wears on today, the last of these candles are going to disappear. We'll get through this 8:30 print, and that'll be it. Right? So after that happens, our volume profile is going to be a lot smaller. It's going to be 80 points wide from 4,500 to 4,580. It's a very narrow 10-day range. 10 days, 80 points wide. That will also give us a classic B-shape profile. Once we lose all of this, that's all we'll have left, right? Is that B shape. So you can see the expansion really nice when we look at it through the volume profile here. TPO and volume profile are lined up perfectly. We spent most of the night right through the middle here, and that's where we had the most volume. And then we paused again through this zone. It's where we got a lot of volume. And even though we haven't really spent a magnificent amount of time here, we do have a lot of volume at this level. What stands out is things like this, right? What we want to see when we put these two indicators together, TPO on one side and volume profile on the other, is we're looking for icebergs, we're looking for ceilings, significant interest of volume at a particular level. So if we found a real shallow area, something really light here on the blue side, and yet we found a lot of volume on the green side, then it would show that we hit a pocket ceiling, an iceberg. Not really seeing that though. Each one of these times that we digested and paused in this move, we had an equal amount of time and volume. So nothing really stands out today, but that's why we run both sides. We're still within our weekly expected move. and we could get all the way into the proximal line and still be within our weekly expected move. We got a long ways to go. 46.14, call it 46.15 is the top of the weekly expected move. We've got a long ways to go before we get there. We're nearly 1% away from the 10-day moving average, and that is not overbought. We're starting to start the curve back up again. Looks like we're not going to come down and tag the zero line. If we consider this waves, then we're on the way back up in this wave. So plenty of room to run. We're not overbought. I mentioned yesterday that we were basically in the center of the basketball court and that we had full room to run in either direction. We're still 3% away from the 10-week moving average. We really didn't give much back here, and we didn't hold long enough for the 10 to come in and reduce that distance. So from this point of view, looking at it on the bigger picture, we're not overbought yet, but it sure is close. There's not a lot left here before we need to consider a pause or a reversal. There's been times more than once that we've gone, 5% plus some. So it's not to say that we can't do that. It's just when we look back, statistically, we're more likely to turn or to stop advancing and let that 10 get caught up to us. We're more likely to do that than to continue on. So these signals wouldn't turn the ES around, right? This doesn't move price. But it does make us consider, how likely is it that the S&P can continue to advance after already being up this much away from that 10-week? At every new resistance level, we would want to consider this. We're already 3% away from the 10, and now we're coming into resistance on the day. Are we going to be able to hold this, get through this, continue to expand beyond this? It doesn't owe us a reversal, however. It can just hold the line, and eventually price can get caught up to us. Another thing that is worth keeping an eye on is the fact that we can kind of reset. If we drop down really fast, down to that 10 and bump it, and then come right back up again, then that would count as a little bit of a reset. We can see those kind of situations, say back here, where we had 1 week where it just down and back up again. So looking at the 5-day change, tech is still down, still in the red. Energy is still in the red, and industrials are still in the red. Not by much, right? And tech this morning is one of the sectors that is up more than 0.5%. So it's on the move, right? And it's been kind of clustered and holding this IX10 pattern inside of this really broad day. So, now we're getting that advance. We closed at 184.75, and this morning we're at 185.65. So it's making that run. We still are trapped inside of this really big bar, though. And that's not just tech, right? There's a lot of markets right now that have a daily chart that is trapped behind that 11/20, that November 20 day. Remember that there's 3 risk-on sectors, but really it's just 2, finance and tech. The third one, consumer discretionary, is more of an assistant. So you get like tech and consumer discretionary, finance and consumer discretionary. When you get all three, tech, finance, and consumer discretionary, you get one of those rip your face off rally days. Now, we don't need finance. And a lot of analysts will say that finance in today's market can't do it by itself. I don't know that I necessarily agree with that. As long as tech isn't going down, finance can take us higher, right? I'm willing to say that, but finance can't carry us if tech is down. So one of the ways that I keep track of this concept on a day-to-day basis is by using KRE, which is regional banks, and the NY FANG, which is just the biggest tech. It's not just tech, but the biggest tech. So when we have both of these moving to the upside at the same time, then we've got those two sectors that we're focused on. We could kind of back that up with the broader market. Got the NASDAQ down here. It's the advancing minus the declining issues. The Magnificent Seven can carry the market all by themselves, right? Really, even only 5 of them can carry the market all by themselves. So I use this advanced decline down here to see if it really is just those 5 to 7 names that are carrying the market, or if we're getting the broader NASDAQ behind us. And this isn't the full NASDAQ composite, it's just the NASDAQ 100. But, you know, most of the time, the other 90 names in the NASDAQ, they're just weight. They're not helping. They may not be holding us back, but they're not helping. But it's still a part of that broader point of view, right? That we want a rising tide that lifts all boats. We want to see all 9 sectors, or 11 if you want to dig down a little bit more. We want all the sectors moving to the upside. We want every industry, every sector, every peer group moving to the upside. No dissenters, nobody going in the other direction until you get into commodities and treasuries and that sort of thing. So if this is going to be one of those rip your face off rally days, then we want to see it in consumer discretionary like Tesla and other names in that group. But we also want it in tech and in finance. Yeah, if you look at the top 20 names in the NASDAQ, and then you look at the top 20 names in XLK, that'll explain why the NASDAQ and the XLK have almost identical charts. Same with the NY FANG on a daily. So this morning it's semiconductors, which are still down on a 5-day period. They're still down more than 1.25%, which is great, right? I'd rather go long from the lows than long from the highs. Semis are up this morning 2.8%. If we're just looking at SMH for semiconductors, then they're still up 1%. And on a 5-day period, they're still down more than 1%. So there's room to the upside there. KRE. Some cloud computing, but I always warn with this ETF that you need to go in and visually check. A lot of times cloud doesn't get pre-market moves. It just has the after hours moves from the night before. So always want to come in and check. It does seem like we're getting some pre-market moves though, so that's good, but I never trust that ETF when it says that we're up or we're down in the pre-market without going in and visually checking it. It's just a think or swim quirk. So here's my little homemade FANG ETF. I don't have any weights applied to it. It's just the names themselves. And I do have Tesla in there. But that group combined, the quote FANGs or the Magnificent Seven, whatever you want to call them. And I do have AMD and Snow in it because the FANG index has those two names in it. That's up almost 0.75% this morning. So we have the FANGs. We have bonds, airlines, technology, energy, almost have industrials and communications. We've got it, right? We got everything we need today, including regional banks, to see one of those rally days. Now we just need a little bit of fire to spark it. Apple's basically flat. Microsoft started that breakout yesterday, finally. The breakout we've been waiting for. And it got out of that November 20, that range that I was talking about, that a lot of other markets are still stuck in. This already started the breakout yesterday. We closed at 382.70. We're at 384.70 this morning. It's a $2 move higher. Be careful with that, because what we don't want is one of those where we get a 2-point move and then give it back, right? Now this one actually had closed down here and then opened way up here. So it was still a pretty significant change. But a gapped up market, I like a gap down market. Let's just say it that way. There's plenty of examples where a gap up works and it holds and we just keep going. But I'd rather gap down and then go. Either way, it's not what we have this morning. We got a gap up. It doesn't owe us a reversal, but you might want to be focused on a pullback to the close on something like Microsoft, that it opens up, fades back, catches support off of the close of yesterday, and then starts that rally. Something like this here, same thing it did back here. So let's just kind of use that one for an example. Closed here, opened, gapped up, came down and got that gap closed, and then made the move, break out above the previous day's high, and continued on. Even here, where it closed here and opened here, it tried to close the gap, and all it was able to accomplish is hit the previous day's high, but it still hit one of our major pivot points. So that's what I'd be looking for with Microsoft. If it doesn't present a wick at all, there's plenty of history where that happens, right? No wick. Another really bullish one, no wick, no wick, barely any wick. So, you know, it doesn't owe you a pullback. It doesn't owe you a tag of the close, anything like that. It could just open and run. So far, everything is looking pretty bullish. We'll have to see how it goes through with the news, right? But I would want to see Apple get into the game. NVIDIA is up this morning, closed at 478. It's sitting at 482. That's a red to green. I do love a red to green. So closed down here, And this morning, we're not out of the red candle range yet, but we are forming a TRB. That's a really nice TRB. If this is going to be a TRB, the target is back here. Now, a good TRB would make that move in an entire single day. It would make that move. The average daily range is $12.50. We've got a market maker move of another $4. So that's a $16 move from 478. That'd be 488. There's your $10. Add another 6. That'd get us to 94. And that's just the measured move right now. We're not even talking about doing something extreme, getting one of those wow days that really shock and awe. We're talking about getting to 494 as just a normal price of doing business. So if we were going to add some shock and awe to it, we would take that $16, cut it in half, and then add to it. So 16 plus another 8. From 94, add that 8. Gets us to 502. Gets us right up into the top of that range. We can make that entire move in a single day. That's why TRBs are so awesome. Guess we really don't need to be too concerned with it, but keep your eye on the round number, 500. These levels are really close together, but 491, just kind of rounded up. I'd use that whole zone. This is going to be an area of resistance. Once we get through that, got a straight shot to be able to get the rest of the TRB done. Meta is also up this morning, closed at 339, and we're sitting at 340 and a half almost. This is a gentle, mild TRB setup, and there's really not a lot to it, except just to get back into that 342 area, 343. Still, that's not bad. So there's still a little bit of room left in there. This is a TRB. Notice how it made it to the top in a single day. This is the candle that we're looking for on all those other markets. That right there. This is the outcome of what a TRB can give you. That's why I focus on them all the time. We do have semiconductors on the move. Even AMD is up $1.35 this morning. We're still IX10 stuck behind November 22nd's candle here. It's not impressive to be stuck behind such a really big candle. And we do have another one. This is why we're IX10 that actually matters. We're trapped behind this candle. We're out of it now. This morning we're at 223.35, so that's 10 cents higher. So now the next area of resistance on AMD is this 123.90. We can get through that, then we'll focus on the high of this big candle and we'll go on from there. We don't know if there's still a lot of sellers sitting up here. There has been. That's been a wall of sellers sitting up there. So a little bit of caution on that one. There is a gap close. I don't think we're close enough to it today, but you never know. At 127.70, let's move that down here. 127.30. Yeah, it seems a bit far away. We don't even have a market maker move for that. But semiconductors are getting some attention, so we could see some follow through. There's been more of those meme stocks moving around. GME started it yesterday and it's still going again this morning. It's up another $2. Started to really pick up on that yesterday afternoon. I'm not suggesting trading it. I don't even watch it because I want to trade it. I watch it because when those meme stocks get to moving around, they're just a reflection of short covering rallies, right? We tend to see it start somewhere and then it bleeds out and we see a lot of other things getting it. So, you know, like ARC. I always screw that one up because obviously I don't trade it. ARC's a good reflection of that short covering stuff. I don't call it trash, but so that kind of feeds us back to IWM. IWM's got a lot of small cap stocks in it. If we do start to see this dash for trash penny stock rally bleed into more than just a short covering rally, then a lot of names in here should be starting to wake up and move around. I'd be looking for names that are near their 200 or moving towards their 200. Because, you know, we've got the Santa Claus rally coming and everything else performance chasing. If they're not going to go for the big mega market cap stuff, which today they are, but if they're not going to go for that, then they're going to go somewhere else. We're not seeing it in other places yet, right? AMC was another one of those meme stocks that we're not seeing it here. Kroger actually got the same treatment at one point, although I would never consider this actually one of those meme stocks, but they did get the same treatment before. Right now it's just GME, and if you're an options trader, go in and take a look at the options flows on GME over the last 2 days or so, and you'll see the swell of trades that are coming in. This isn't in a gamma squeeze yet, but if the activity that we saw yesterday continues, it will be in one soon enough. Gamma squeeze, where they force the market makers to buy stock to cover the options position as a market maker. Otherwise, watch the clock. Should be a fairly good day. We got everything running. Just remember, this isn't set in stone. News can come out at any point today, yank the rug out from underneath this rally, and everything falls down, right? So far, we've got a really good start to one of those days. But got to keep your eye on who's speaking today and the data points that we get starting at 8:30. So, you know, it can all unravel right there. Be careful, be safe. I'll see y'all tomorrow.